Ric Deverell from Credit Suisse. Thank you so much for joining us, Ric. Let's just get your view. It's Iran is helping to do the heavy lifting when it comes to the oil price, and of course saber rattling taking place over the Straits of Hormuz. But at the same time, OPEC production, or OPEC supply, is at 3-year highs.
Yes, it's a very interesting time in the oil market, as you say. I think what we're seeing is a fundamental tug of war, if you like, between two competing forces. We have a very tight market, and on the one hand we have obviously a whole range of supply issues with the issues in Iran, the one that people are talking about today. But on the other side we have a bunch of macro risks. We have particularly people focusing on the risks in Europe. And I think what that means is that we have the oil market in a volatile range at the moment that's likely to persist for some time.
Well, I mean, how significant is it that we're at these highs we haven't seen for, what, 7-8 months? And tell me, where does it go from here? I mean, do we have an average oil price of over $100 the barrel?
Look, I think we do. It's very difficult to have any precision on any flat price forecast at the moment, as I say, given that there are very big tail risks. But I think the most likely thing is that the price of Brent oil stays at about the current range. I think it's going to be a very choppy range, but it probably stays where it is through the rest of this year. And my guess is that, given the tightness in the market, that it actually moves up next year rather than down. I think in the short term the risks are to the upside, because I think there are a whole bunch of supply issues that could come into the play. But absent those, I don't see a lot of downside risk unless we get a big meltdown in Europe. So it looks like where we are is about right at the moment.
Ric, you know, when we have a look at the Iranian crude story, and of course the European Union putting sanctions on Iranian crude, does that really materially make a difference? Because you can get your crude from anywhere, really.
I guess there's a couple of ways of looking at what's going on in Iran. Personally, I think that the idea that Iran will actually block flows through the Straits is pretty unlikely. But I think what it means is that that increases the risk of supply disruption, and it means there's a scramble from a lot of countries, including China, to source their crude from other areas. And I think that does provide a material tightening of the market in the short term. Obviously, it is a short-term issue, and unless you actually get a supply disruption from these issues, it doesn't flow through any further than that. But I think it does have a material impact, both in terms of the level of risk in the market, but also in terms of other countries trying to secure supply from other areas.
Let's move to elsewhere in the commodity side of things here as well. I mean, we talked about frozen orange juice and the bad weather in Florida affecting that. But generally, you know, this time last year we'd be talking about much higher food prices. Has that really gone away? It was responsible for much of the inflation that we saw in China, of course.
Food prices, again, are very interesting. And the way I think about food prices is that we have very tight balances in several of the food markets, particularly corn. But obviously the kind of aggressive move we saw higher last year was driven primarily by weather events. And we're seeing some of that tension come out of these markets. We've seen the price come down a little bit. But I think we're still, given particularly with corn, things are still very tight. We're still very vulnerable to any further supply disruptions. So my best guess is that food prices go sideways to down over the next 12 months. But if there is another big weather event somewhere, then of course that will put tensions in the market again.
Of course, we can't just have a broad brush on these. What about the grain side of this? The agricultural products are out there as well, because there's a lot of pressure, of course, also coming through from the alternative fuel market.
Yeah, look, I think that's right. And if you look at corn as the banner boy in terms of tightness at the moment, and if you look at the drivers of why corn is so tight, what we've really seen in a structural sense is a significant increase in global consumption growth rate since about 2003. In that period, growth has basically doubled. And there are two factors that are driving that. A lot of people focus particularly on Chinese demand, which has been material. But within that, I think the equally important factor has been ethanol use in the US. And I think what will be interesting going forward is to the extent that the reduction in subsidies in the US flow through to a reduced consumption of ethanol. Our view is that in the short term that's unlikely, because at current oil prices it's still very profitable to produce ethanol, but I think these are the things that we need to watch going forward.
Ric, I just want to end with a look at some of the base metals there as well, and your forecast therein.
Sure. Look, I personally think that base metal prices have fallen too far. I tend to try and look at the fundamentals in these markets, and what's interesting is that whilst a whole bunch of really bad things can happen, or could happen, they haven't happened yet. So people are very worried about Europe, people are very worried about China. But if you actually look at the economic data, what's clear is that in Q4 last year, global economic growth was only slightly below average, and it looks like will be about average in Q1 this year. And that suggests to me that a 30% fall in copper is overdone. So if you're looking at a 12-month view, I think some of these prices will move higher again. But I do think that there'll be enough things for people to worry about through Q1 that we stay in a pretty choppy range in the short term.
Ric, thank you very much indeed for that. Ric Deverell there from Credit Suisse joining us from Singapore. Just